Tina Peterson with Remax One. So I know we usually do it on Friday, but today we're going to do Thursday because I won't be around tomorrow. And again, Tom Horn over here with Mid-America Mortgage. And today we want to do a quick video, just random fun facts about your mortgage payments. So first question for you is, how long do you need to be on a job in order to qualify to buy a house?
Well, technically you don't have to be on the job yet. If we have a guarantee letter saying you're going to start in 2 weeks, we can go ahead and get your deal done, and you get sent us that first paycheck in 2 weeks. And but we need 2 years history of employment, and there could be some gaps there. We just have to document 2 years.
So it doesn't have to be with the same job.
It doesn't have to be with the same job, and like if you have a job gap in greater than 30 days in the last 2 years, FHA wants you on the job for 6 months. So rule of thumb, if you're on the job for about 6 months, you're not gonna have too many issues.
So when you look at their income, how do you qualify them? Off of their gross income, net income, what income counts?
That's a good question. A lot of people, their take-home pay, and they think that we calculate how much they can afford based off that. And we actually use the gross pay. So what's your hourly rate? We do our calculation and come up with your annual income, divide that by 12, and that's the number we use towards your debt to income.
Okay. So the next question is going to sound a little tricky, and hopefully we can explain it correctly. If you give me a quote for a payment on a $300,000 house for, let's say, $2,000 a month, how can I figure out if I end up putting an offer on a house for $310,000? What is an easy way for me to find out what my payment could possibly be?
Well, we usually have rule of thumbs in this business, and one of the rule of thumbs that is really easy to understand is for every $1,000 up or down in sales price, it's going to equate to about a $6 difference up or down in your monthly mortgage payment.
Perfect. And then I know everybody loves interest rates. So how much does interest rates affect a mortgage payment? So if you give a 4% interest rate and then next thing we know it goes up to 4.25%, how is that going to affect my mortgage?
Well, a lot of people, they try to play the game on what days to lock. You know, the market changes daily. If you're quoted, say, a 4% interest rate, and tomorrow it comes in and it's at 4.25. Well, the difference in your payment from about 4% to 4.25, it's going to be about $30 difference. It's about $15 difference per 0.125 on your interest rate.
That's all? Okay, and then when, I know sometimes first-time home buyers are renters most of the time, and nobody wants to pay a rent payment plus your mortgage payment. So if you have a buyer who's buying a house and they close in May, when is their first payment typically going to be due?
If we close your loan in May, your first payment's not going to be due until July. So if you're timing it right, the mortgage we pay in the arrears, and if you're renting, you pay that in advance. So if you're renting, you pay your first month, you pay your, say you pay your May payment, and we're going to skip May, then your first mortgage payment is going to be June. Then you can time it right and not have a double payment. You're not paying the rent and your mortgage at the same time.
Awesome. So I think those are all of our little fun random facts for today. Tom will actually be back with me in about 2 weeks, and we're gonna go over the different types of loans individually, and it'll probably be about 4-week series and how it's gonna go. And he's so excited about that. He loves to be live. But thank you guys for joining us and watching. If you have any questions, just let us know. Thank you.
See ya.